Welcome again to ECCB Connects. On today's episode, we take a look at the payment system in the Eastern Caribbean Currency Union and some of the benefits and opportunities that it presents for economic growth. Speaking at the Fourth Growth and Resilience Dialogue, Alex Straun, fintech developer and the CEO of Genesis Innovation Management, outlined that a well-run payment system should be secure, cost-effective, and efficient. It should also facilitate financial inclusion and be innovative.
Eastern Caribbean is 8 separate countries, physically separated, population of roughly, say, just over 500,000, so for want of a better figure, say 600,000, totally independent of each other, separate governments in place, etc. But we share a common currency, yes? Now, the economy on a whole, or the economy between each of these countries, and one, if you look at intra-company, that's minuscule when you look at relative to some of our trade with external partners, etc. The other reality we have to face is the increase in cash crime, widespread disruptions in terms of hurricanes, natural disaster, high banking fees, limited options, especially for innovation, options for businesses. For example, you only have to look now and you will see that the competition for local businesses isn't necessarily the other business across the road, but more the Amazon, the Alibaba, and some interesting investors who every 5 meters would set up because they're well funded, replicate the business. Some foreign investors who would replicate the business, saturate the market, and squeeze out the local mom and pops. So it's on this premise that we always have a payment system. We have always had a payment system, whether you want to consider it cash. We have always had a payment system where people could make payments, etc. But it is important to note that no matter the innovation, if the innovation is going to be monetized, if it's going to be scaled, you need that payment system. And the physicality of cash means that there's only so much you could do being physically present. So what would be the basic foundations for a well-run payment system? I will want to advocate that if we were to set these public policy objectives, it must be efficient in terms of speed and accuracy, security, safety in terms of protection of life, resources, and information, cost effective, in other words, it must reduce the cost of doing business. It must not be, because you implement a new technology, it must be more expensive. We have had instances where you roll out something new, yet it takes longer to settle and are more expensive to the end user. It must facilitate financial inclusion. In other words, it must level the playing field and everyone must have access. And if you were to contrast this with some of the moves by the banks in terms of because of the KYC, because of their thrust, that you can't have an account if you don't have a certain amount of funds. For instance, some banks might say if you don't have $18,000, you will be paying the bank more to hold the funds for you, and technically you're just basically watching your money go through the door. So it's in that sort of landscape, those sort of challenges where you find that not everyone would have access because the price of having a bank account might be counterproductive. Financial empowerment, on that same vein. Why have a bank account if you can't necessarily look towards financial growth and independence over time? And innovation and competition, but competition from a cost recovery basis. Now, reverting to the opportunities to go further, permit me to briefly explore the evolution of the digital economy, where we can readily basically look at the trajectory in the digital economy and what one would expect from a well-functioning payment system. Now, according to the United Nations Conference on Trade and Development, there is no real authoritative definition on what is the digital economy. Suffice to say that the origins have been in the adoption of the internet and the internet economy. Now, this includes policies, digital technologies, not necessarily those on lines, but to look at what really is the digital economy, we may need to look at some of the technologies, etc., that is very prevalent in the digital economy so that we could understand its development implication. Equally important is to assess the digital economy through the lens of these technology, and you see some like blockchain, data analytics, artificial intelligence, 3D printing, Internet of Things, automation and robots, and cloud computing. However, there is always a risk of paying too much attention to the latest innovations that are most in vogue, and rather than in the technologies that are most impactful on our local economies. And one of these is the payment system outright and what goes into the payment system. Now, the digital economy, in terms of three disparate stages or categories. At its core, what started this revolution is the innovation in hardware, technology, internet, broadband, etc. The telecom providers, electricity, we have heard that mentioned. So those fundamentals. And then that became the foundation for digital services platforms. So you had, now persons are able to shop online. And this is now in the now economy, payment service, and in some cases, mobile applications. So you're able to log on to your bank account, in some cases have your mobile banking, etc., and access your funds. Now, in some cases, because you have a credit card, etc., you could use Airbnb, etc., and you have some elements of the share economy or the gig economy like Uber. However, you would note that the sharing economy straddles both the narrow economy and the broad economy, so too is the gig economy, because the broader economy is about transformation, going further and doing more. So what you would see is things like interoperability, e-business, e-commerce, artificial intelligence come into play here, and the United Nations Conference on Trade and Development refer to the algorithmic economy. Why are we saying that? If you know what to overlay the payment system, if you were to overlay the payment system on top of this digital trajectory, the digital economy trajectory, what would you see? You would see, for the core of the payment system, we have central bank settlement system, and I would be presumptuous enough to say this would include cash, and the participants to that system, which is dominantly the commercial banks. In the narrow economy, you would see the narrow aspects of the payment system being bank-centric. We have system being offered by the commercial banks to facilitate payments. You have these include cash, checks, automated clearinghouse, cards, online electrical transfer between customers' account, etc., but largely constrained by these participants. So you have the core, based on the central bank's infrastructure, then you have the narrow, based on the persons who have access to the central bank, and you are limited only by what they can provide. Now, it can be argued that neither the central bank nor the commercial banking sector can do all things to all people. Therefore, within the context of these first two layers, it translates that development of solutions will be limited to the participants who have access to this sector. And a key example is that online payments can only be driven by the payments offered by these institutions, such as cards or bank-to-bank transfer. So it is only what these two institutions offer you would have persons being able to benefit from. So how do we go further and do more? This is where we get into the broad economy, where we now start to go to the next element of digital transformation that allow payment system to facilitate another layer, using the same values of safety, efficiency, and reliability, but geared to the promulgation of financial inclusion, innovation, and cost reduction to doing business, the ground rules that we established earlier. This feature include extended e-commerce beyond those limited to banks. Consider the option available to some local businesses for e-commerce. Right now you have businesses only able to access e-commerce solutions from, say, PayPal, WooCommerce, etc. Translating in a nutshell to they are accessing a foreign country's payment system in order to be able to do digital transformation in our local economy. So what would happen is, should we have that transformation in terms of broad transformation in the payment system, then it means that we no longer have to use an external system, the payment system of the US or the UK, to be able to facilitate payments locally. And you could imagine, I don't have to tell you about the implications for on the economy in terms of foreign exchange, holding money overseas, and then the remittance costs if you're trying to bring that money back home. We also have the empowerment of the local digital economy, where micro, small, and medium and large businesses are able to do additional things. Right now, the system doesn't, unless you have a bank account, you can't, for instance, do smart parking, smart contracts, and other innovations. What we are looking for the a well-run, efficient payment system to be able to do is to enable those add-on, value-added, transformative sort of developments by local and micro businesses. Artificial intelligence, small contract, and the ability to not only execute tasks such as paying for the clearing of goods from customs, but also KYC, insurance, underwriting, and claim adjustments. The incorporation of additional players, drivers, and are facilitated by interoperability. Typically, right now, the commercial banks don't share API. They are not mandated to share APIs. There are no APIs for the automated clearinghouse. So what APIs are is a set of codes or standards that enables anyone who wants to innovate, do value-added transformation, but still interact with a commercial bank, interact with the settlement system, the payment system. They can take this and they obey these rules in terms of being able to develop a solution that can use that basic infrastructure. And so we don't have any standardization within the payment system as it is that facilitates that sort of value-added, transformative sort of development. And as a result, we have not been able to benefit. And this is the reasons why we then have to basically rely on PayPal, WooCommerce, and those sort of innovations in another person's jurisdiction to be able to even help the local or micro economy, much to our detriment. Additionally, interoperability needs to be such that the system needs to facilitate or provide for tiering, meaning that for a small innovator, how do you facilitate them experimenting, piloting, and implementing in the main payment system? And these are some of the things that we need to ensure, these are some of the benefits that can be derived from the broader transformation. It is important for the discussion to happen if we are going to benefit from any sort of advancement in the payment system. So the discussion between public goods, what is a public good, and what is a private sector innovation. So for example, public subsidies in order to facilitate the development of some expensive technology, and or when a public entities operate in a particular system, does it operate it from an infrastructure level and allow the private sector to do what we call value added, or does the public sector operate it from a value-added perspective, but operate it from a cost recovery perspective? That cost recovery perspective would mean that it is not undermining competition and or providing a good at an unfair competitive advantage to private sector development. And this is what we would refer to as the David versus Goliath, smart versus money and credibility. Now, all being said, some of the common threads that we have pushed here is that all payment models must be able to facilitate people to people, people to business, business to business, and business to people payment. And they must be such that it encourages and facilitates local development of skills. We have an abundance of bright people, so to speak, intelligent and capable persons here, but we need to be able to facilitate them. For some businesses to do business, you have licensing regimes that are not adapted to some of these innovations. Used from, say, I'll use an example, a commercial banking license being applied to a fintech developer, where you have the use of one set of regulation being used to try to fit and govern the regulation of an innovator, and by virtue of doing that, you push that innovator out of the system because the hurdle to enter that market is too high. What is the role of the regulator? Is it to build confidence, dialogue, balancing, catalyst, or is it basically to take a knee-jerk reaction and shut down something that is that proposes to make a difference in our lives? And then the last but not least, what is the role of culture? How do we see money? How do we protect privacy issues? Do we believe that because some person share in the public good, that everything should be available and publicly shared? And I think that is where I will stay. Thank you.
To view any episode of ECCB Connects anytime, any place at your convenience, check us out on YouTube, Facebook, and LinkedIn at ECCB Connects.
We're almost at the end of Season 12 of ECCB Connects. The final episode is 25th March. Be sure to stay connected with us on YouTube, Facebook, and LinkedIn while we are on break, and join us on 6th May 2020 when we'll be back with new episodes. ECCB Connects, who we are, what we do, and how we serve you.
That's it for this week's episode of ECCB Connects. Thanks for watching, and be sure to join us next week when we bring you the final episode of Season 12.